BingX, a trusted global crypto exchange. Trade spot, futures, or copy top traders easily. Sign up via the link or referral code to get 30 USDT instantly, plus up to 1,500 USDT in bonuses for verification, deposit, and trading.
Superannuation tax changes. New rules have been proposed for your super. Here's what you need to know. The Australian government has significantly revised its flagship tax policy, responding to widespread criticism of its controversial superannuation tax plan by adjusting key thresholds and reducing projected revenue. Following a sustained period of intense scrutiny from political figures and industry groups, the government has acknowledged and addressed major points of contention, with Treasurer Jim Chalmers stating the updated policy aims to better target superannuation concessions. In a move to benefit lower-income earners, Chalmers also announced an enhanced tax offset to bolster their retirement savings. This recalibration sees Labor withdraw crucial elements from its initially proposed superannuation tax overhaul, a decision that has drawn sharp criticism from the Greens, who have labelled it a gift to the super-rich. The original superannuation changes, unveiled in February 2023, proposed an additional 15% tax on superannuation balances exceeding $3 million, escalating the total concessional tax rate to 30%. A significant point of contention was the absence of indexation for this threshold, a feature heavily criticized by opposition parties. Under the revised framework, announced by Chalmers on Monday, the government will now index this balance to the Consumer Price Index, accounting for inflation. Furthermore, a new tiered tax structure will be introduced. Balances between $3 and $10 million will face a 30% tax, while those above $10 million will be taxed at 40%. The implementation of these changes has also been deferred by 1 year, now scheduled to commence in July 2026. A second major point of contention revolved around the original proposal's taxation of unrealized gains, earnings that had been accrued on paper within an account but had not yet been withdrawn. Critics expressed concern that assets held within super accounts, such as properties or farms not slated for immediate sale, could see their value increase, potentially triggering tax liabilities based on these theoretical profits, a scenario Shadow Treasurer Ted O'Brien described as theoretical profits. Treasury has since confirmed that the revised methodology will now apply to realized earnings, calculated based on taxable income. Treasurer Chalmers asserted that these adjustments represent sensible changes which take more than 2 years of feedback into account, adding that the government had worked through the issues and found another way to deliver on the same objectives. While the focus has been on adjustments at the higher end of superannuation balances, Chalmers also introduced an unexpected enhancement for individuals with lower incomes. Effective from 2027, the low-income superannuation tax offset, or LISTO, will be increased from $500 to $810, with its eligibility threshold raised from $37,000 to $45,000. This augmented offset is projected to add approximately $15,000 to the superannuation balances of lower-paid workers by the conclusion of their careers. Chalmers highlighted that this change will help deliver a more secure retirement for 1.3 million Australians, of which around 60% are women. The expanded eligibility criteria mean up to 3.1 million Australians could now qualify for the LISTO. Regarding the number of individuals affected by these revised superannuation plans, the government maintains that the changes at the top end of balances will impact a similar proportion of taxpayers, approximately 0.5%. The original proposal was anticipated to generate $2.7 billion in its first full year of operation. The revised plan, however, is now projected to raise $1.6 billion in its initial year. Treasurer Chalmers indicated that the net impact on the federal budget over the next 4 years is estimated to be around $4.2 billion, a figure significantly influenced by the 1-year delay in implementation. The initial superannuation tax proposal lacked sufficient parliamentary support to be passed into law during the previous parliamentary term. Both the Coalition and the Greens have adopted a cautious stance, awaiting further details before fully committing to their positions on the revised plan. However, Ted O'Brien has characterized the government's concession as a victory for the coalition of common sense, describing the changes as a full knockdown rebuild of an utterly failed policy. The Greens have expressed support for the enhanced listo and the indexation of thresholds but advocated for lower, not higher, eligibility amounts. The decision to announce these superannuation changes now comes after a protracted period of debate. Labour initially presented its super tax plan in February 2023 and maintained its stance for over 2 years despite mounting opposition. As recently as Friday, Prime Minister Anthony Albanese had downplayed any imminent policy shifts. However, Chalmers confirmed that the proposed adjustments were approved by the Albanese Cabinet's Expenditure Review Committee on Friday. Prime Minister Albanese is currently overseas on leave and is expected to return on Sunday, immediately commencing a trip to Washington, D.C., to meet with U.S. President Donald Trump. When questioned about the timing of the announcement, Chalmers stated that the government had taken its time to work through the issues, explaining that they didn't react quickly to every editorial or every criticism from every quarter. He emphasized that the objective was to separate the genuine feedback from the usual kind of predictable, partisan feedback that you get from time to time after more than 2 years of input. Looking beyond the immediate budgetary implications, these superannuation changes prompt broader reflections on the government's appetite for policy reform. Commentators, such as economist Chris Richardson, a well-known budget analyst, view the situation as indicative of the challenges governments face in enacting substantial policy shifts. Richardson noted on X that today's timidity worries me,